Hey everybody, this is Jim at SP500chart.com. It is actually Sunday morning, a little bit before 9 a.m. on June 9th, 2013, and we're going to take a look at the chart of the S&P as it relates to the week ending June 7th, and we're also going to look at what took place on June 7th. So it's going to be our daily video plus kind of a weekly review. Before we get into it, I just want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we're starting out with a 30-minute chart, and basically the gist here is for you to see, and my little thing keeps opening up there. I apologize for that. I'll have to learn not to roll my mouse over it. But you can see that we were in a ascending channel that took the S&P over this long-term resistance line that was currently right around 1598. Now you might say, well, wait a minute, shouldn't resistance be one of the previous highs in either 2000 or 2007? Well, you'll remember that 2007 surpassed 2000 by a small margin. So therefore, when we draw that trend line, by the time it gets to 2013, it is higher because it is a slightly rising line. And there it is. That broke out with a gap up in early May, and that was just part of this longer ascending channel. And I'm going to take the opportunity to clear out maybe a line here and there that's getting in the way. But anyway, to make a long story short, there's our ascending channel where we really didn't have very many down days at all. You think about it, from the middle of April until May 22nd or May 21st, we had no day where the S&P gave up more than 20 points. Then we had this pretty significant down day, which resulted in a back test of broken support, which now should be resistance, that did exactly what it was supposed to do. We formed actually, and I didn't really mention this at the time, but we formed what was kind of either a triangle or maybe a very shallow left-shouldered head and shoulders top. We measured the breakdown distance from that, where we would expect a target. We came out with a target that was actually in the mid to high 1590s, but we had this line right here that I thought would probably produce a bounce. And we'll get into that. But the other thing that I wanted to show you is the entire right shoulder right here of this strangish looking, but let's call it a head and shoulders top. I was calling it a triangle based upon what took place after this peak. It doesn't matter because both patterns would produce the same thing. So it really doesn't matter whether we ignored from here left or if we took the whole thing into account. You still measure the height of the pattern. If it's a head and shoulders, then the height is in the middle of it. If it's a triangle, the height is at the beginning of it, but it's the same height. So that broke down. Okay, that pattern actually broke down on Monday. Was that Monday? Yeah, on the 3rd. Then we had a perfect back test on the 2nd. Then we came down exactly, I mean almost to the penny, this long-term line. And then the market bounded up strongly Thursday and Friday. And now we've got a real interesting situation. So that's kind of that's the overview of what has taken place. We've obviously been in a strong uptrend, excuse me, a strong uptrend overall since the middle of November 2012. But we've had a couple of little sell-offs along the way, and this one would be, let's take a look. Then I had to make an adjustment to the chart. This last sell-off so far is the deepest one the S&P has encountered since that mid-November rally kicked into gear. I'm going to do one more thing here. I'm going to go ahead and extend this line on out. I think this is still a technically important line, and where it gets up to up here may be interesting depending upon a couple of things that have not happened yet. Just wanted to do that as a matter of housekeeping. Okay, I put a little blue highlight around our trading this week, just to recap in a little bit more detailed analysis. And then we're going to take a look at what may be an interesting situation developing. First off, this was the neckline of our triangle or head and shoulders top. You can see a clear breakdown. Excuse me, my voice. I'm just struggling with sinus junk, kind of chronically, to be honest with you. So there's the break of that channel. Then we came back for a back test of that neckline, came solidly down for the next 2.5 days, tagged that long-term line, which also happens to correspond with where that gap began back here in early May. So we would expect a bounce there, and I mentioned this for a number of reasons. So we definitely got it. So breakdown, back test, 2.5 days of selling, and now you can see that we also had identified another descending channel that was bounded by these two blue lines. Originally, I thought maybe we were in a wedge with this being the bottom line, but that did not play out. Instead, and I think this line still has some significance, but clearly for 2 days the S&P had no trouble getting underneath this, so the significance is minor. But on Friday, here's what's interesting. The market bounded all the way up and got above this descending resistance line, then appears to have kind of gotten trapped between two lines that we've had on the chart. This one, which since it broke, even though not by a technically significant margin, this line right here did serve as some support. It needs to break by a larger margin for it to be solid support. So got to keep our eyes on that. But then the move was also stopped by our yellow line. And if we go back to the yellow line, you can see that that goes back all the way. Let's just go to a daily chart. Goes back all the way to where this big rally started back in the middle of November. Now on the daily chart, that line moves around a little bit. There's one time where we got underneath that line, and that was back in the middle to late April. And when we did that, the S&P formed a nice little inverted head and shoulders pattern that got things back over the top of this line. Now we're going to go back and look at the 30-minute chart. This line is now back in its correct place. It just moves around a little bit with this software, and I ran over my... Stop that! Good. Okay. I guess I'm just not very coordinated with the mouse. But here you can see underneath this line, and strangely enough, we may be making yet another inverted head and shoulders. Now, I can't tell you that that's what it is absolutely so far, but this certainly could be interpreted as a left shoulder and a head. The question is, do we actually end up with a right shoulder? This little pattern back here was pretty symmetrical. Right now, if we were to bound up over this line right here, then we wouldn't have that kind of symmetry. But I'm kind of on the alert coming into this week that we may be looking at the last 5 days of trading as at this point what may be an incompleted or an incomplete inverted head and shoulders pattern. So let's keep our eyes and ears open to that and see if that's what we indeed end up with. We don't know right now where the neckline would be if we had to draw one. If you forced me at gunpoint to say where's the neckline, well, I'd have to go with that. But that is an odd looking thing, but hey, what the heck, let's keep it there. We just make it real light colored so we don't get thrown off by it. It could be that we end up with this neckline from our head and shoulders top. See what I'm saying? Maybe we go here, come back up to this, then dip back down, then take it out. Or it could be that all of Friday is just an anomaly, and we get some impetus on Monday, and the selling starts out, and we come back down. But it's not looking like that right now. It's looking like the S&P wants to reverse here, but we may have an incomplete reversal pattern as of the close on Friday. So let's just keep our eyes on this. A week really, oh, by the way, and we also had our little channel here. Everything worked out beautifully this past week as it relates to what we would expect. I mean, we were expecting this pattern to either break up or down. It could have gone either way. The good news is we got a breakdown and then a back test. So that became a tradable event. Let's see what this week brings us. Look, guys, my voice is giving out. Thanks for taking time to watch this. Thank you for your support. Let's see what happens in the week coming up. Take care.